Good morning, Chattanooga. This is Brandi Carpenter back with another podcast. Your favorite homegirl, aka the Dapper Realtor. I'm here today with my special guest, Miss Mary Slake. How are you today?
I'm doing great. How about you, Brandi?
Awesome. It is a lovely day. As you guys know, this is my typical Monday analysis. It'll be a little bit different today. We're actually going to get some expert guidance here today and just get some opinions from Miss Slake here. So why don't you tell us about yourself?
Well, I have been in the mortgage industry for 37 years now.
Okay.
Mainly in Georgia, but been in Tennessee for the last 9.
Okay.
So in the Chattanooga area.
Okay.
Done just about everything there is to do in mortgage,
Okay.
from management to processing to closing to
Awesome.
underwriting to origination. So
Perfect.
I've seen it all.
Tons of experience, right?
Yeah, been
Awesome.
through all the ups and downs in the market. So yeah, just
Okay.
this is what I've done my entire adult life.
Awesome. Okay. What types of things can a client what are the perks of working with you? What would you say makes you stand out versus other lenders?
Well, one, I think my experience
Okay.
is a huge factor because the way the market changes and the guidelines change, you just don't, you want to have somebody who knows and who's very thorough, especially that first couple of times they talk to you, that they're really looking at everything to make sure you do qualify and not just looking at a credit report
Right.
and taking what you say and telling you get approved for a house or
Right.
you can get approved, and then to have the whole thing fall apart 2 weeks before
Oh, my
closing or
gosh.
2 days before closing. That's a miserable experience.
Yes.
So I think you just want to make sure you have somebody who is listening to you and paying attention to what's important to you, and not talking down to you.
Right.
So,
Education.
educating you, but not talking down to you. But making sure that, you understand how the process works, what happens next, the important role that your realtor plays, the important role of getting things done on time and, responding quickly, getting your documentation in, things like that. And just literally, shepherding you to closing so that hopefully really you're final approved and you're just waiting for that closing date, and it can be an exciting time
Right.
where you're looking at paint colors and
Of course.
this and that and not scrambling to get those last minute documentation
Right.
in.
So you play a
So-
critical role in the home buying process.
Yes, and it really starts with doing everything up front. I know
Right.
it can be scary for a lot of people
Right.
to make that first phone call to get pre-qualified. They
Right.
they don't know if their credit's quite there, or they don't know, but the thing is, you don't know what you don't know. Until you know, until you ask the question. So it doesn't have to be a scary process, but it does have to be your first step before you even start looking at those houses online. You want to make sure that you're going to be able to buy what you look at, and when you actually get in the car with a realtor or meet
Right.
a realtor at a house, you
Right.
have the ability to make an offer on that house if
Right.
that's the one you want. So.
I definitely think, and I'm going to chime in, I think that one of the most critical things is a lot of buyers go into the home buying process shopping before they know what they can afford.
Right, and
So,
that's
yeah.
just the absolute backwards way to do
Right,
it.
right.
Because if there is something on your credit, maybe you don't even know it's there
Right.
because things happen.
Right.
It's best to know up front. It's best to know what can I do. If you know you've had some rough patches in your credit, it's best to just go ahead and get with somebody who can tell you, okay, I see what this happened, and here's what you can do.
Right.
And sometimes it can be a really quick fix, and sometimes the only thing that'll heal it is time.
Right.
By, making those payments on time. But it's better to know and have a plan.
Right.
And so that's part of what I do too, is help people have a plan. Hopefully I
Awesome.
get you pre-qualified up, right then and there the first time around.
Right.
But sometimes it doesn't happen that
Right.
way.
We definitely wish for that experience, but that's not always the case. So having a good lender, that's the purpose of having a good lender.
And just and having a plan.
Right, for sure. I guess what we'll lead into is some common questions people have, which is, I feel like, what's the difference between a pre-approval and a pre-qualification?
Well, that kind of depends on your lender.
Okay.
For me, it's one and the same.
Okay.
For a lot of lenders, a pre-approval will mean it's gone through underwriting and everything. Pre-qualification for some lenders is they pull your credit report and take whatever information you give them
Right.
over the phone
Right.
and take it as gospel and write a letter based
Right.
on that. I do what's called a full doc pre-qualification. And because I've been doing this for 36 years, I usually don't send it to an underwriter because I have underwritten myself.
Okay.
But I am going to verify employment. I am going to verify assets. I'm going to look to see if there's been any weird large deposits in your account.
Right.
I'm going to look to make sure, if you say you work 40 hours, that your pay stubs reflect that 40 hours.
Right.
Or if there's a discrepancy in income, go ahead and look at all of those things up front.
Right.
And I can do that myself just with the vast amount of experience. Now, I'm not above going to an underwriter if it's a difficult deal and I want somebody to look at it so that I know I don't run into a problem later on too. If there's just something unusual about it, then I'll go, before I write a pre-qualification letter. But if I write a pre-qualification letter, it's because I know I have dotted all my I's and crossed all my T's.
Of course,
So,
awesome. That's awesome. I actually had one of my clients asked me yesterday, are lenders looking for you to have a substantial amount of money saved, or like a vast amount of savings, like just up front?
it's not. I mean, having money in savings, having money after closing is always helpful.
Okay.
Having your own money in your transaction is always helpful, but it's not always necessary. There are some programs that have down payment assistance that you can utilize, like the Tennessee Housing Authority, THDA, has
Right.
down payment assistance. But you do have to qualify based on their guidelines, which they have pretty strict debt-to-income ratio and credit score guidelines, and it has an income limitation. So if you make more than, it's right around $72,000 a year, you're not going to qualify for
Right.
that.
Okay.
So, and then there's as little as 3% down, with conventional, and FHA's 3.5%. So you're not having to have a lot of money, but of course,
Need
and
something.
depending on, I've had people who have squeaked by getting into a house with, $50.
Wow.
But, it just depends on your overall situation.
Of course, perfect, glad. And you do, I don't know, what products do you, I'm familiar with them, but
Yeah.
you're going to tell people what products you guys actually provide.
So yeah, we do all your traditional FHA, conventional, THDA, USDA, Georgia Dream, which is the equivalent to THDA in Georgia. It's a down
Okay.
payment assistance program.
Okay.
We have renovation loans that we can do. That's a whole different animal and probably time for a different podcast discussion.
Right, okay.
We've got a couple of new programs coming down the pike. We've got a few bank statement programs.
Okay.
Once again, to get into those odd, off the cuff, probably different podcast topic altogether, because
Okay.
you'd have to go into those for a little bit. But so we have lots of availability on
Perfect.
programs.
Awesome.
The majority of the people fall into your FHA, VA,
Right.
conventional, and then or your THDA, Georgia Dream, USDA type
Perfect.
programs.
Awesome. Okay. All right. Well, we're going to get into a little bit of a market analysis situation here. Let's see here. Have you observed any shifts in the home buyer preferences or purchasing patterns right now?
It's not so much home buyer purchasing patterns. I think we've seen a little bit of slowdown, and buyers starting to be a little bit more cautious and choosy on the houses, as far as that and the inspections. We've had a little blip up in rates from, we were ticking down rather nicely, and we've had a couple of months of hotter than expected inflation reports.
Okay.
So this week is Fed week, so Wednesday's a big day.
Right.
I'm pretty much of a Fed geek, so
Okay.
Wednesday afternoon I will be at home watching CNBC, watching
Okay.
Jerome Powell actually
Powell, yeah.
give his press conference, so that I can get an
course.
idea of what's happening next in the market and what they're thinking.
Of course.
Nobody thinks there's any chance of any sort of Fed rate cut this month, but maybe the May market, because the Fed meets about every 6 weeks.
Okay. Yeah.
And we've got a bunch more economic data to come out between now and the next one.
Of course.
Nobody's expecting them to raise them either,
Right.
but it's going to be what they say after the meeting to
Right.
figure out where their thought process is. So that's where we are
And
with
of
market
course, I
shifts
think
and trends.
So I think like what employment plays a huge part in that.
Employment play and the jobs reports came in a lot hotter than was expected. But when you dig into them a little bit, and I don't want to go into too much weird geeky details, it's we're seeing that hours worked is a little bit less.
Okay.
So yeah, maybe there's more jobs, but they're not having you work full 40 hours. You're working average of 34 hours. So
Right.
you're not really still making as much money. So you're not seeing people lay off jobs, but cutting back hours. Just one example is Volkswagen. We're seeing a lot of Volkswagen employees have what's called an excused absence, which they're just saying, we don't have enough work. You can go ahead and go home, and we're not going to penalize you for it, but you're not working 40 hours, and you're not going to get paid for 40 hours.
Wow.
So
Okay.
as a lender, I have to take that into consideration in your qualifying.
Right. Okay.
So,
Jeez, that's some critical information there to know.
Yeah.
So that's awesome. Okay. Yeah, definitely. So we're definitely going to stay tuned, wait for that Wednesday update. I'm sure that's going to be,
So-
I know they did say we're looking at hopefully 3 decreases in the rate within this year.
so that's going to give us an indicator of, are we really going to see that with
Right.
all of these hotter numbers that have come out?
Right.
So,
Okay.
okay.
Awesome. Let's see. Our next question is probably going to be, let's see here. We already talked about the different products you have. I will say, to tie into that, let's see here. I would say, how are we talked about the time, like as far as like people, the employers, kind of even with the remote work, or tying that into remote work, like people that work from home. A lot of people have questions about that. Like, how are the lenders kind of adjusting to work from home people or remote?
It's as long as the employer states that they are a remote worker and can
Okay.
work from anywhere.
Okay.
Excuse me, trying
Okay.
to get a little comfortable here.
No, you're fine.
And that it does not change their pay
Okay.
or position. There's no problem. We deal with remote workers all the time.
Perfect. Okay.
So
What is, and I'm thinking from a buyer's standpoint, what is a typical document list that you guys require for a first time home buyer? What could they think that they would need to bring to you eventually?
usually what I'm going to look for is your most recent pay stub. If you get overtime, things like that, I'm going to want your year-end pay stubs for the past 2 years, because we have to average that out.
Okay.
And sometimes the verifications of employment don't come out and break it out as well as they used to,
Right.
because they're using automated services and the income gets thrown into other or something. So,
Yes.
so if you have access to payroll services, it's best to go ahead and get like that 2022 year end, 2023 year end, year to date, if you have things like bonus or overtime. If you're straight salary, your most recent pay stub and your W-2.
Okay. Perfect.
Then we would look for bank statements for whatever accounts you're using for your down payment and closing costs. So usually want 2 months of those. Driver's licenses, because we have to verify who we're dealing and
course.
working with to comply with the Patriot Act.
Yes.
And if you're a first-time home buyer, usually we're going to need tax returns
Okay.
for the last 2 years. So, or if you're self-employed, we're going to need tax returns.
Okay, perfect. I was going to dive into that for the entrepreneur side. I know you mentioned you might be having a new bank statement or bank document loan. Is that like specifically for entrepreneurs, basically?
That's basically, we look at your cash flow.
Okay.
So, but like I said, that's a program that's going to take a lot more. It's a little teaser here,
Okay,
but
yeah,
it's something
for
you've
sure.
got to get into. But it's sort of an old past product that used to use a lot back in the 2008, 2009 era, and now they've brought them back. You know, the rates are not going to be as good on those type of programs because they're private REIT investors. So, but we do have those things available. They're typically for investors.
Right.
But you know, your self-employed people, it certainly is never going to be for somebody who's got a regular salary job.
Right.
And then, you know, self-employed, if you have S corps or partnerships, those K1s and partnership returns would be needed too.
Okay, perfect. Great information, because we have a lot of entrepreneurs out there who I think are in a position of, like myself at some point, we deal with a lot of cash, and then we deal with more so, just not, we don't have a W-2, so we kind of wonder, hey.
And I'm not an accountant. Let me just state
Of
that
course.
right there. But if you are going to, look to get a loan and you are self-employed, I understand, writing off as much of the expenses as you can, but just understand
It hurts you in a weird way, yeah.
if it's not reported income, we can't use it.
Right, exactly.
So that's sometimes when those bank statement type loans might come into play.
Yes.
Looking at straight cash flow.
Yes, and like I said, as a entrepreneur, that's something I struggle with. Is like, do you take the deductions and save on the front end, but then when you want to get your home or a home loan, you realize it kind of hits you in the rear end a little bit because you've taken these deductions, so it looks like you haven't made that much money.
So I mean, you just need to make sure you're consulting with a tax professional.
Right, 100%. Yeah.
And
definitely recommend that.
Okay.
One thing I want to touch on is, as a realtor, I think a lot of people have questions, of course, about the THDA program, but I would like to go over just the differences between people that I think qualify more so for conventional, who should apply for conventional, and who should be looking into a FHA loan.
Typically, and they're both really good loans.
Right.
So I know sometimes FHA gets a bad rap, but it's a good loan, and sometimes it's the better loan because the rate may be better. But just on an average, if you've got a much higher credit score, you're in the high sevens, and you have 3 to 5% to put down,
Right.
the conventional is probably going to turn out to be a better product. But that's not always the case, and I would lay FHA side by side because the FHA rate may be better, but the mortgage insurance on the FHA may be higher than the conventional. So sometimes they wash out to look the same. And then if I'm choosing between the two, I'd probably go conventional because the FHA also has that mortgage insurance that's financed in, that 1.75 that's financed in, that you don't have with conventional.
Right.
So, but FHA does definitely benefit your more moderate credit score borrowers.
Right. And just to touch on that, because a lot of people don't understand that conventional versus FHA, that is the major, I feel like one of the major keys is that there's a PMI that comes into play with taking FHA, right?
Yeah,
So,
no matter what, you're going to have that, and FHA calls it MIP, Mortgage Insurance Premium, whereas conventional calls it PMI, which is Private Mortgage Insurance.
Right.
So same thing essentially, except for FHA, it is backed by the government.
Of course.
But there is a 2-component factor to FHA. They have an upfront that's financed into your loan amount, and then you have a monthly that is a set factor for everybody. Whereas on conventional, your private mortgage insurance is very credit score driven, so it could be a lot less.
Right.
And on FHA, the mortgage insurance does not ever drop off.
Right.
It stays there for the life of the loan, whereas conventional, once you reach that 20% equity, you can request to have that dropped off.
Okay.
So those are just things to take into consideration when you're looking at those loans.
And I think as a realtor, we definitely preach that when you go to purchase your home, a lot of people don't realize that you can, once you put what they call sweat equity into your home, which is like, I think you can, whether you're adding on a deck or you're adding,
You've just done
upgrades.
improvements in general.
Right. And that can count towards your equity. And then after, what is it? I think is it a 6-month minimum that you have to wait?
They don't really have minimum. Usually, I mean, they want to keep it on there about 2 years, but that's not necessarily hard and fast rule because if you've done improvements, just personally, I gutted my kitchen and redid 2 bathrooms, and I did that in the first year and a half.
Yeah.
So I did not wait 2 years to sit there and request that be done.
And then at that point, is it just like a reappraisal? You have them come out and do a reappraisal?
You contact your servicer, and they send out, and usually they're just sending out a real estate agent, a broker,
Really?
to do a CMA.
Okay, awesome.
Costs about $150.
Okay.
$200.
But you save
But
on
you
the...
can then hopefully drop that MI off.
Exactly. Awesome. Great information we're giving out today. We're dropping some real gems. One of the final things I think we want to talk about is a question I think everyone out there is asking. Everyone wants to know, is now a good time to buy?
Well, I don't think house prices are going to go down.
Okay.
So that's the thing, and I understand that people are a little afraid of the rates. What they need to understand is we're actually in a little bit more normal rate environment right now than we were 2-3 years ago. We were in an artificially low rate environment. I think we're still on the high side of it, and hopefully we will see things temper down and get into, by the end of the year next year, maybe get into the lower 6s or 5s.
Okay.
There's no guarantee. But especially in our area where we're living in, where growth is just exploding everywhere, I
Chattanooga
don't
is
see
rapidly growing.
and there's a lot of things coming, economic wise, and companies that are going to bring people in. I don't think house prices are going down.
Right.
So you can go ahead and at least get locked in on that price and start building that equity, and you can always refinance later.
I've been preaching that to all people.
The fun saying, marry the house but date the rate.
Right.
and it's good, but you want to make sure when you do go to refinance that it's a real true value. You don't want to pull that trigger too soon.
Right, exactly.
So that's why you want a mortgage professional who's going to do a break-even analysis to make sure this is the right time to refinance and not just keep churning.
Right.
Because I will have to admit there are some not great lenders in our midst who will churn and burn your loan as many times as you let them refinance it. So you want to make sure you're getting a good break-even analysis.
And with that being said, as realtors, like I said, this is why we have preferred lenders. And honestly, one thing that I like to note is that when I look for or when I meet a client, we don't necessarily just send you to people. Me personally, I pick and choose who I think will be a great fit for that client. You know what I'm saying? So, I match my lenders with my clients, whether it comes to personality or financial needs or just structure, that plays a major key. But having, as realtors, we have preferred lenders, which is, and there's no incentive that we get from sending you to these lenders.
Nope, that would be illegal.
Yeah, exactly. So, it's just a matter of who we trust and people that we definitely, have proven results. And so with your company, you guys are actually a partner with KW, correct?
We are a marketing services partner.
Perfect.
MIG, though, has been around for 27 years.
Okay.
And we are the number 1 THDA lender in the state.
Awesome.
And we're pretty high up there in the top 5 lenders in the state. So,
okay. Awesome.
So we pride ourselves on doing the right thing and doing what's best for our customers. So.
Perfect. If you're out there, just talking to people who are out there now, if they're wanting to get more information or get set up with this process, and how do we reach you? How do we get started? What are the first steps should we take to get this process started to see where we are?
You can either always get in touch with me through Brandi, but you can, my name is Mary Slake, and that's Slakie. So my website is maryslakey.com, which will take you to my Mortgage Investors Group website. Or you can always reach out to me on my office phone, 423-680-7322, or my cell at 912-484-3152. So you can text, email, call, go onto my website, click apply now, get started, and that's the process rolling.
Yeah, awesome. Well, it has been amazing.
Thank you, Brandi, for having me on there.
Of course, we'd love to. I'm super excited, and I'm so great to maybe in the future we hit our other topics and get some other stuff going. So we definitely appreciate you you coming out. So we definitely appreciate it.
Well, thanks.